Okay, so after a pretty shaky start to the month, the US stock market has been staging this, well, surprisingly strong comeback. But here's the big question. Is this rally for real or is it just a bit of hype? We're going to unpack what's pushing the market up, the risks that are hiding just under the surface, and what you really need to watch for next. Let's get into it.
First things first, let's just set the scene. For anyone who's been watching their portfolio, the last few days have probably felt like a huge sigh of relief. It really feels like investor confidence is coming back, and yeah, the screens are flashing a whole lot more green than red.
And look, this isn't just a feeling. The numbers are absolutely backing it up. We're seeing some pretty broad gains across all the major indices. The Dow is up about 0.4%, the S&P 500 has gained about 0.3%, and the tech-heavy Nasdaq, it's climbed almost 0.6%. So yeah, a really solid, positive picture across the board.
So the obvious next question is why, right? What's going on here? What are the tailwinds that are actually pushing stocks higher right now? Well, it turns out there are a few key drivers working together that are really boosting all this optimism.
It really boils down to these three main things. First, there's this renewed hope that the Federal Reserve might finally ease up on interest rates pretty soon. Second, bond yields, which have been a major headache, have started to chill out. And third, you've got a big comeback happening in the crypto market, and that's lifting the whole mood for riskier investments. And that brings us to this idea of risk assets. It's pretty simple. When investors are feeling good and confident, they're way more willing to put their money into things like tech stocks or crypto. Stuff with the potential for bigger rewards, but also, of course, bigger risks. The recent jump in Bitcoin, for instance, is a huge signal that this appetite for risk is back, and that good vibe is spilling right over into the broader stock market.
But it's not all about these huge macro trends. Sometimes all it takes is some really good news from a single, major company to help lift the entire market.
And a perfect example of this? Just look at Boeing. The company's stock literally jumped by double digits after they gave some super optimistic guidance on their future cash flow. This is exactly how a bellwether company, a giant in its field, can act like a barometer for the whole market. A surge like that doesn't just bump up an index like the Dow, it injects a serious dose of confidence across the entire system.
Okay, so that's all the good news. But we wouldn't be doing our job if we didn't look at the other side of the coin. There are some pretty significant headwinds out there that could absolutely stall this rally in its tracks.
And the pressure is kind of coming from two different directions. Out on the global stage, you've got jitters about the Bank of Japan maybe raising its interest rates, and that's stirring up a lot of volatility. And then right here at home, some of the recent economic data, especially these weak manufacturing numbers, are signaling that the U.S. economy might actually be slowing down.
And this really gets to the heart of the whole thing. While the market is feeling good right now, one analysis put it perfectly. Persistent signs of slowdown could challenge the current optimism. It's just a crucial reminder of how fragile this whole recovery might actually be. So we've got these tailwinds pushing us forward, and these headwinds trying to push us back. With all these competing forces swirling around, what's the one factor that could really tip the scales one way or the other?
Yup, it all comes down to the Fed. Right now, so much of the market's good mood is based on this expectation, this hope that the Federal Reserve is going to cut interest rates. Their next move, and honestly any little signal they send beforehand, is either going to confirm those hopes or just dash them completely. Everything is hinging on this. So, with all this uncertainty in the air, it really helps to know exactly what to look for. Think of these as the key signposts on the road ahead. They're going to tell us where the market is really headed from here.
So keep these four things on your radar. First, key economic data. We're talking inflation and jobs numbers. That's going to directly influence the Fed. Second, all the upcoming earnings reports. Will corporate profits actually be strong enough to justify these higher stock prices? Third, watch what other central banks around the world are doing, because those decisions have major spillover effects. And finally, keep an eye on crypto. It's really become a key barometer for investor risk appetite. So at the end of the day, this is the dynamic we're watching. It's a massive tug of war. On one side of the rope, you've got the hope that the Fed is going to ease up. On the other side, you've got the fear of an economic slowdown. And, wrapped around the whole thing is all the uncertainty from global factors. And that leaves us with the million-dollar question, doesn't it? The market is fundamentally caught in this battle between the hope for a brighter, easier future and the fear of a looming slowdown. For now, it seems like hope has the upper hand, but we all know that could change in an instant. So, which side do you think's going to win out?